Good morning, good afternoon, and good evening, wherever you are in the world today. I want to welcome you to our webinar on orchestrating insurance outcomes, a deeper look at underwriting. We are thrilled to have you with us today. My name is Deniz Isik, and I am the U.S. sales leader for Newgen. I am excited today to moderate this in-depth discussion between two industry experts. As you may know, the property and casualty industry is currently navigating some tricky waters right now. Underwriters are spending an unprecedented 40% of their time on non-core activities, leading to billions in efficiency losses. With rising liability costs and increasing natural catastrophes, we must clearly rethink our approach on underwriting. But here's the good news. Today's discussion will focus on how we can transform these challenges into opportunities. Our panel of experts will explore the latest trends and developments in the underwriting process, emphasizing how emerging technologies like AI and innovation workbench tools are reshaping the industry. We will also cover shifting stakeholder expectations and how to deliver improved business outcomes, offering you a forward-looking perspective on underwriting landscape. Now let me introduce our speakers. Deeksha Gupta, Director of Insurance Solutions from HCLTech, Anurag Shah, VP of Head, Product and Solutions from Newgen Software. Before we dive into discussion, I would like to invite each of our speakers to introduce themselves and share a bit about their backgrounds with perspectives. After that, we'll jump into some questions that will help us explore today's topic in more detail. So with that being said, Deeksha and Anurag, over to you.
Thanks, Dennis, and good morning, good afternoon, good evening to everyone who's listening. Thank you all for taking out time and being here. Would love to talk about this industry. We've been in the industry for almost 2 decades. So this is something we all say that we accidentally go into insurance, but we end up adopting insurance. So that's the way it has been with me as well. I'm currently a director in the insurance solutions team in HCL. And our role is to, kind of help the customers in the digitization objectives by understanding the current landscape and how can we provide them tailor-made solutions and expedite their growth. Spend time on the InsurTech side and MJ prior to HCL. That gives me a lot of objective as to what our customers are grappling with and how we can help them forward. So looking forward to a very interesting discussion today. And thanks all again.
Hi, I'm Anurag Shah. I manage the products and solutions for our Americas business at Newgen here in US. I'm based out of just outside DC, Northern Virginia. I have been with the company for about 25 years now. And in this long journey, I have had opportunities to implement several insurance solutions based on Newgen products and platforms for different carriers here in US, different parts of North America, including Caribbean, Canada, and globally multiple countries in Asia Pacific, India, several places. So had the kind of exposure to different and varying needs of insurance across different territories, different personas, how the underwriters look at it here in US versus what kind of best practices and the gains that have been delivered across the world as well. So it would be interesting to kind of pick on what Deeksha brings from her experience and what I can contribute there. So we're very excited and happy to be here.
Absolutely. Thanks, guys. Really appreciate the introduction. And I'm really excited to get into these questions. There's some great questions that we have. I can't wait to get your insight in regards to how you see the market and what you've seen through your customers' eyes. So with that being said, let's just dive into the questions right now. This is a 2-part question. I think, Anurag, if you want to start, with the first answer, and then Deeksha, you can follow up afterwards. I think we'll go back and forth here for these questions so we can get insights from both of you. So the first question, it's a 2-part question, right? So do you foresee that the insurance industry is shifting gears right now? And with that being said, and are they moving the next level of evolution? What emerging trends are currently shaping the industry right now? Anurag?
Yeah, insurance is at an inflection point. There is this evolving need of leveraging big data, predictive modeling, real-time streaming for more accurate risk assessment. And carriers are needing to balance the value of product variety with the cost of complexity across operations. Competition is intensified, driven by new entrants and traditional insurers investing in innovation. The underwriting and claims are under scrutiny uh, amidst rising costs, risk premiums. So the insurance carriers, in my view, must address three critical areas: the customer experience, operational excellence, and the business innovation. And if they are to advance to the next stage of growth, this transformation requires integration of complex information flow across front, middle, and back offices. So if you look at customer experience, this is to drive obviously the top line by improving the customer acquisition and satisfaction. The operational excellence, typically it helps you improving your bottom line by streamlining operations and enhancing performances. And the third point that I talked earlier, the business innovation, right? So here the insurers should look at unlocking new business opportunities and try to grow the business. So those are a few things that I think should be important for the insurers. Maybe Diksha will like to add on top of that. Or...
Yeah, yeah, sure, Anurag. And I think it's very interesting, and I'm pretty sure you will recognize the same thing that insurance industry has been very slow to adopt to changes. We've all seen it during our journey, and they've been the laggards in the industries. If I compare across industries, but interestingly now, because of the regulatory pressures, economic downturns, a lot of population, which is about more 400,000 people, are going to retire from the insurance industry in the next 5 years. I think there's a lot of pressure, which is a good way in a way that now they're thinking to fast forward and they're thinking to say that, okay, we need to compete. They are not only competing within themselves, within their set of people, but they're competing with the insurtechs as well. They're competing with the MJs as well. So there is that ingrown ask and demand now. And how can we fast track? What do we need to do? We just cannot afford to keep the lights on, but we need to ensure that we are step aheading, understanding the risk. And there the emerging risk, like cyber risk 10 years back, was just evolving. Maybe people had not heard of it. Now we have so many regulations around it, and the more the data you use, the more the cyber risk kind of ends up coming. So they're getting tied up. So everything could have a pro and con. Like we're talking about AI, and we'll dwell a little more on that as we go ahead. But now there are also talks about, should we have guardrails around AI? Should we have AI insurance? In fact, that if a carrier is using more of AI, how do they protect themselves? Are there some lurking dangers behind and forward? But yeah, so I think given that fact, we can all see when we are with our customers, everybody is wanting to use more and more data technologies, more and more of AI, more and more of digital innovations. And they are also realizing that it's no longer a siloed world within their systems as well. The underwriters are now talking to the claims are talking to the loss control people, the legal, everybody is, like kind of now infusing things together. And they need to understand things in a holistic manner. So definitely see a lot of changes. I would say this is a very interesting time for people who are just getting into the industry. It won't be that boring the way it was for us maybe when we were in the industry. But yeah, definitely, I think a lot of changes to come in from the cyber risk, to the talent acquisition gaps that we're seeing, from the data innovations to the competitions, to insurtech disruptions, and a regulatory compliance and all of it. So could see a lot of changes, and we have to see how we and our customers together tread these waters and ensure that we are taking everything into totality.
Absolutely. I couldn't agree more. Great responses. All right. So second question. Okay. This is a two-pronged question as well. Why do you think these changes are needing or happening now? Is the first question, right? The second one is, how do you think these need to be addressed, right? What do you think will be achieved by doing this?
Yeah, sure. I can go ahead. Yeah. So again, I think some of the reasons are, the technology advancements. Like the way AI is coming and can be used is looking to be far simpler than a lot of the other technologies. Like I was reading somewhere that cloud adoption took more than a decade to get adopted and get familiarized. But now we can see all that we all are getting very familiarized with AI. We are talking as if we are talking about lunches and dinners in a way. So it's becoming a very comfort topic, and people are realizing the power of AI, Gen AIs, and other predictive analytics tools. And then there is a lot of economic pressure as well, which is rising interest rates, inflation, supply chain disruptions, which started happening mostly and intensified during the pandemic and afterwards as well. And things are becoming expensive. The loss ratios are increasing. So there is a very high focus on increasing profitability for all the carriers, for the industry at large, and they are being pressurized to innovate and do some of the things that are needed to step forward and help them out. And I think last but not the least is the customer experience. When you people like you and me are working with different industries, we are seeing more personalized, more transparent forms of transactions. And I think that's where we're also coming and demanding the same for insurance. We need more handholding, more personalized, tailor-made solutions. We don't want one size fit all. So I think there's a multiple set of pressures from all the sides, and the timing is looks very similar, but maybe on some of the things we sat too long on for, and that's why everything is kind of coming together. But I think these are some of the things that will help and become the force for the innovation that we have to go forward into.
Awesome.
Yeah, I mean, I agree on all of the points that you said, and maybe I'll take a different spin on it from what the carriers need to do for addressing those underwriting challenges. Let me take a view from put my view from that perspective on this question. So I see there are four key evolving complex risks that they are grappling with. Number one, and Deeksha, you talked about it in a different way, profitability pressures. So we see, for example, the P&C insurance industry, they had this combined ratio of 97.7% for commercial lines in 2023 last year. This indicates a slim underwriting profit margin. Number two, underwriting challenges. So again, in P&C underwriters, if we take them, they find assessing complex risks very, very challenging. The underwriters struggle with the data management challenges. And the number three is the process efficiency. The average time to underwrite a commercial property policy is what we have seen, 12 to 15 days. And this is where if automation is included, the automation could reduce the underwriting by anywhere between 25 to 30% for these P&C insurers. And last, number four, but not the least, is regulatory compliance. These the insurance CEOs and C-suites, they are more and more concerned about overregulation, and majority are expecting the regulatory complexity to increase over the next 5 years, to say so. So what I'm saying in nutshell is this underwriting digital transformation that is becoming a key priority for the insurers. I mean, those are a few of the points that I would just like to add on what Deeksha said.
Awesome. Great insight. All right, question number 3. This might kind of blend together from question number 2, but I think you can get a little bit more in depth into how to answer this one. But in your opinion, how are underwriting practices evolving across InsurTechs, MGAs, and carriers? So, Anurag, you want to go ahead and start?
Yeah, I mean, I'll look at it from slightly different perspectives. So, if you see the content complexity, this is continuing to inhibit the digitization and underwriting workflow automation. If we look at activities like submission, underwriting, all the way to policy binding, there are about 5 key activities or workflows, the way, whatever way we look at it, which are inhibiting this automation. So number one, submission. So we see that there are incomplete or inaccurate submission informations. There is a lack of standardized submission formats, which are causing inefficiencies. And there is difficulty in prioritizing the submissions based on the risk. Number 2 is verification and authentication. The verification of authenticity of the submitted documents and information can be time consuming. and resource intensive, especially for complex or specialized risks. There is a difficulty in identifying the fraudulent or incomplete submissions. Uh, Ensuring compliance with regulatory requirements and in internal policies while verifying the legitimacy of insured entities. And then number three is data enrichment and risk analysis. So with limited access to the external data sources for risk assessment, that is a challenge. And then lack of integration with the analytical tools for comprehensive risk analysis and time consuming data enrichment process, leading to delays in the decision making. Number four, I would say risk rating and quote generation. So the manual calculation of premiums, these are leading to inaccuracies, limited flexibility in adjusting rates, especially when those are required based on the real-time data, and challenges in offering competitive quotes due to lack of market insights. And last but not the least, again, number five, policy binding, ensuring alignment between underwriting guidelines and binding authority limits to prevent instances of overexposure or underpricing of risks during your policy issuance, coordinating the policy issuance across multiple stakeholders, including underwriters, brokers, insureds, and reinsurers. All of these require efficient communication and workflow management. So those are the five aspects or activities within underwriting workflow automation that I think are making impact on this area.
Awesome. Great. Deeksha?
Yeah, thanks, Anurag. And I think it's interesting how you laid out just also a little different take when I look at the customers. Basically, is that we all are seeing much use of data-driven insights, and we can see the premiums are they are writing more premium across the board. But I think one thing, and Dennis, you also started in an introductory note, is 40% of the underwriters still spend time on the manual administration task. So that means our operational expenses are still more or less the same. Why, if you're using so much of digitization and things like that, we're still stuck? I think one of the answers and one of the things that we see across the board is that every customer is trying to do things that still in a silo manner. They might be using, say, third-party data. They might be using telematics. They might be using, say, imagery, satellite imagery, but they are still using things in pocket. And I think one thing that we really need is an end-to-end. We just don't need to look at a very siloed point of view and say, okay, let me hand the underwriter just a solution for unstructured data, or let me hand the underwriter just a solution for, say, just let's say pricing or rating. We need to have something which is end-to-end orchestration in terms of which helps with intakes to insight to pricing to orchestration to everything. Then only we will be able to tackle that beast that is glaring at us and staring at us, and we would be able to give the tools and help underwriter do the best what they're meant to do, rather than getting stuck in these manual and administrative tasks, which is not what is meant to be. So I think definitely two streams will continue and will further prosper. One is the data driven. We'll see more and more influx of data. How can we use the third party data to draw more decisions, and also for pre-filling some of that information that is needed to make robust decisions. The other would be automations, all kinds of to automate some of the routine work that we see. And that's where we see a lot of help from insurtechs who are coming in the market. And another interesting thing is that even the insurtechs are consolidating. Even they are realizing that if they were just on the core system side, they cannot survive there, and they need to ensure that they have an end-to-end solution. So we should be looking at end-to-end solutions. And our carrier also on the other side is still debating about whether we need to build or buy. Maybe it is. And what do we need to do? Do we need to have one part of the solution? Do we need to have an end-to-end solution? So I think we need to ensure that we take all of this into account and we go where it makes most of sense, but looking at holistically again, not looking from one silo. Because if we start to put just our focus energies on one side, as Anurag was mentioning, right from submission to the policy, that's where we need to go. We cannot say, okay, this area is important and that area is, because then we'll lose the data insights. people and our carriers still have to make a lot of sense about the data accuracy, data governance. So I think that is what we would see more and more. Um, and we would tend to see an ecosystem where each and every carrier first or brokers, or the MJs that we work with would start to see, okay, how can we do infuse things together? Maybe have some build, some buy, some data augmented tools, some Gen AI, some, a mix of things, but how can it work best to their advantage?
Excellent. I couldn't agree more. Being in the field every day, talking to customers, I see exactly those same pain points that you guys described. Great. Excuse me. Okay, on to question number 4. What do you think needs to be done to address the expectations of multiple stakeholders? And are the shifting expectations influencing the underwriting approach? Deeksha?
Yeah, I definitely think that's true. Again, for all the reasons we've been mentioning before, but there is more and more ask of personalization from the customers, speed, convenience, need of the hour. That they get that transparency. Even the brokers, for the fact that if the brokers are sending us submissions and we just send them, the underwriters just sending them back as a decline, that's not going to help their end customers as well. So can there be things where they can educate the brokers back that, okay, maybe we can decline that, maybe we can accept the risk with certain challenges like this, maybe we can have lower the limits or things like that. That will help the brokers get and educate their end customers as well. So brokers are expecting that from the carriers as well, from the underwriters as well. Underwriters themselves are expecting multitude of data augmented tools that can help them get the data driven division insights, and not only just for new business but even for the renewals, because that's when it becomes even more and more critical. So are they getting that? And the other side is the regulators. There is a very strong pressure from the regulators, asking of what needs to be done and how are the companies adhering to that. So I think when we see our customers, we also realize that they're also getting pressurized from a lot of their end-to-end stakeholders, be internal, be it external, and they're doing the best in the capability. And I think our role as we work with them day in day out is to help them in that journey, educate them, and give them that microscopic, not like a microscopic but a macroscopic view of how it will help them if they see them 5 years down the line, and are they going and moving ahead in that path or not. So I think with said that, I do feel that there is a lot of ask from every stakeholder, and we need to understand the landscape. For some it might be a rating issue, some it might be orchestration issue, some it might be an intake issue. So we need to understand that and kind of help them out to make the best choice for themselves.
Yeah, I
Anurag?
mean, I can take a couple of leaves from what Diksha just said, and also I'd maybe relate it to the previous question's response where I talked about from the submission to the policy binding. So it looks like it is time to take the leap. The insurers need a revolutionary way to manage their risk, or to do for risk assessment. The insurance underwriting journey automation, it needs to be built on an end-to-end automation platform, and to provide few things. So like fully automated submission processing and underwriting processing journey, artificial intelligence driven underwriting to do the appetite checks, the risk analysis, the risk rating, and policy issuance, integrating things like geocoding, event response, locational intelligence, and take it to computer vision, virtual risk inspection for COPE evaluation, the construction, occupancy, protection, and exposure. Real-time collaboration becomes very a key with ecosystem partners. Diksha also talked about the MGAs and reinsurers and brokers and all of those. So to include all of these ecosystem partners, including your risk engineers, MGAs, brokers, and all of those guys in the real-time environment, in the real-time collaboration. And last but not the least is the accelerated deployment and change management within this end-to-end automation platform, and possibly on a low-code development platform where it will give you that agility. So those are few of the things, maybe what Deeksha talked about. If we look at these 5 or 6 aspects in that context, I think those will make difference.
Great. Awesome. Thanks for that, Anurag. Great response. All right. Question number 5. How is the use of emerging technologies such as AI, Gen AI, in Underwriting Workbench help to get better insights? So, Anurag, you want to start with that?
Yeah, I mean, of course, these are the talking points today. The artificial intelligence, Gen AI. Uh, uh, so there are 2 ways to look at it. Obviously, artificial intelligence, the traditional AI, where there are pre-trained models which are coming up, and then there is the Gen AI, which is LLM based, prompt based. So I'll take both the aspects. So for example, let's see, there are 2 or 3 user personas. Let me take a couple, 2 or 3 user personas to put across my points. So how does these technologies help a CSR, a customer service representative? So a couple of things. We see that by efficient case summarization, it enables the Gen AI, enables quick updates to be shared with the customers during calls with these CSRs. And based on different types of service requests, the CSR can get those automated prompts through the Gen AI. And this again goes back to the end-to-end platform, looking at holistically and bringing those into the prompts and helping with the Gen AIs to these CSRs. Then if we look at another user persona, for example, underwriting analysts, for if we look at the medical reports, the summarization of those medical reports, again using the Gen AI technology for complex medical reports, facilitating a smoother and quicker underwriting process. And then some of the specific query resolutions, which can be asked using specific questions, again, prompted questions to provide those detailed insights, aiding the underwriting analysts in making those informed decisions. If we look at maybe a claims processor as another user persona, the claim summarization, again, to summarize those medical reports or claim forms, streamlining the entire claim processing workflow. Or maybe the AI-driven estimates by leveraging pre-trained traditional AI models. The claims processor can obtain those accurate estimates for cases based on the analysis of similar historical cases, enhancing your decision-making efficiency. Fraud detection, uh, using advanced analytics, AI capabilities tailored to the unique patterns and behaviors associated with the fraudulent submissions. So if I just have to maybe think of few of the pre-built AI models for better decisioning, uh, few of such models which comes top of my mind is mortality risk pre-screening model, mortality risk prediction, health insurance claims for fraud prediction, customer lapsation prediction, auto insurance policy renewals, surveyor predictions. So these are few of the things which I think the technology, the LLM based Gen AI, as well as the traditional pre-trained models on AI, will help overcome several of the challenges and bring in the efficiency and productivity to the insurers.
Awesome. Diksha?
Yeah, hi, and then yeah, I'll come back to Anurag, and interestingly, he mentioned some of those use cases that we're seeing across the board as well. Just want to quote one of the studies that was done by the analyst Celent, and they said that they have, kind of recently done this survey that about 24% of the insurers across the world have started adopting AI. And it's very interesting because given the industry, insurance industry timelines and adoption of any technology, it's taken years and maybe ages. So that can itself kind of proving the fact that Gen AI is really growing very, very quickly, and it's becoming that complex that everybody's understanding and realizing the value. And they also kind of forecast that about by 50%, by 2026, 50% of the insurers would be using that up. So I think given the fact that, and we are seeing that across the board as well, when we are talking to our customers, and though they might be at a different maturity curve, some of them are just wanting to start the journey. Some of them are already aware of where they can apply this. Safe to improve the combined ratio. Should they apply that on the claim side, on the underwriting side? Some of them are asking us, can we come back with some of the use cases as to what they're seeing? So I think it's a very interesting conversation. And there are other set of customers who are also looking at the data strategy alongside, because they do realize that data plays a very important role if they need to make this as a success. So I think definitely we are seeing it is touching all the points. It's touching across the policy distribution to the claim to the underwriting. And I find that for underwriting to start with, one of the two important things that we can use this and leverage this could be one for, as Anurag mentioned, for a risk summarization. So just to give an example, if I being an underwriter need to decline a risk, I can give back now. Once I have a risk summarization available, I would know exactly why we're declining, and we could educate back and we could give those responses back to the brokers as well, which will further in turn help. And the other could be risk triaging. Should I look at everything? Is everything important for me? Or should I focus on what's the critical risk or the book that could help, the portfolio grow further? So I think this is just one of the two things, but there is so much more that we can apply for underwriting, be it, for the risk placements, for the triaging, as I mentioned, for risk assessment, for pricing, what if pricing tools. So there is so much more. And I think we have to start doing things one by one. We cannot build the whole castle today, but we should start seeing, okay, how can we help our underwriters bit by bit to reduce the work, of what they're trying to spend on the manual ask, and get them more insights, get them more information, get them a well-sounded third-party information about, say, a risk website, what the risk, what they are doing, how the loss runs are, how the prior policy information is, or things like that. So the more information and the more they would be able to make those logical conclusions. But definitely, as Anurag said, there's going to be a big evolution around AI. And we know it's all here to stay. But we have to make those choices for the customers based on their business, based on the landscape, based on their trajectory, their ambitions, their visions, where they want to be. Maybe they want to be competing with the insurtechs. Maybe they want to be on the tier one side of things. Maybe they are in an M&A, so like some of our brokers, they are acquiring a lot of agency year on year. So they are grappling with other issues and other problems as well. And how can we help get our AIs focus on that part of the bit as well to ensure that everything is seamless for them? So that's why I feel that it's, again, not one fit solution. And it is important that we focus on that, but we focus based on what the needs of the customers are.
Excellent. Great response, guys. All right, here's the last question. Final question. It's a big one. So how do you think we can achieve underwriting excellence? And on top of that, what are the tools we can bring that brings value to our customers, right? And then lastly, how is the joint value proposition, HCL and Newgen, can add value to the insurance industry? So Anurag?
Yeah, let me first take care of your first part of the question, and then I'll come to the joint, how the insurers and carriers, how jointly between with HCL and Newgen, we are helping these insurance and carriers. So on your first part, obviously, all the things that we talked about, Deeksha touched upon, I talked about earlier. There are gaps which needs to be plugged in. There are automations which are required to be done for a defined and definite outcomes. So things that we talked about so far: seamless submission, streamlining those submission process to ensure seamless integration and efficient handling of underwriting requests. Then client engagement. Deeksha also touched upon it a couple of times earlier. So those personalized and need-specific, empathetic support and communication throughout the customer journey. The fraud detection, advanced analytics, artificial intelligence capabilities, tailored to those unique patterns and behaviors associated with the fraudulent submissions that I touched upon earlier. The inspections and the risk assessments. Utilizing those innovative IT solutions, including the Gen AIs of the world and AI pre-trained models, to enhance the efficiency and effectiveness of your risk inspection process to ensure the thorough assessment and timely decision making. Integrating those integrated risk exposures in assessing and managing those risk exposures to mitigate potential losses and ensuring profitability in your underwriting process, and the extended ecosystem, incorporating those external data sources which participate into your ecosystem, incorporating those technologies to enhance your underwriting capabilities and your decision making process. Now, having said all of these things, where HCL Tech and Newgen bring value to our customers, the way I look at it is, I think we are uniquely poised within this partnership for helping our insurance carriers. Newgen, being a product and platform company, brings all of those low code, content management, communication management, workflows, rules, exceptions, dashboards, analytics, technologies like AI, Gen AI, hosting on the cloud, utilizing and harnessing the native cloud capabilities to provide all of these. And when we combine this with the deep industry domain of HCL Tech, bringing the things that they do best, the of course the domain, the project management, the implementation, and all, and because HCL Tech will have a better and deep insight on the lay of the land of these insurance carriers, not only in these areas but all the adjacent areas, the ecosystem where this entire underwriting journey or this process automation touches and integrates. So when we look at these combined value to the insurers, I think we are really, really uniquely poised at a place where insurance carriers can take advantage of this.
Excellent. Deeksha?
Yeah, no, I couldn't agree more with you on that.
Yeah.
I would just say that, when we look at anything which we are using and doing to help our customers, we need to ensure that, we are doing business driven outcomes for them. We are ensuring that we have certain yardsticks with us. Is it going to improve their CSAT? Is it going to improve their profitability? Is it going to reduce losses, expenses? Is it compliant? And that's where we build the journey from. So when we look at their current landscape and we see, okay, this is where they are. This is the element that we need to look at. As I mentioned earlier, maybe the orchestration, the underwriting workbench, maybe we say the risk placement, the pricing tools, and then we say how can this all bring them efficiency? Is this something that they need? Do they need something heavy duty? Do they need something lightweight? Do they need something that could be built analytically from AI models? So I think that's the assessment that we need to do, and objectively bring those tools out, which can help and educate them alongside, given the scenario that we've seen across the board. As I've seen that a lot of our customers are doing the best that they can, but that they have a window, which is siloed to their organization. And when we look across the board, we see relationships. We see a relationship between a broker to an underwriter, to an underwriter to an MJ. So we understand what it takes from both the sides of the party. What both the sides of the party need to do and how do they need to enhance things up. So I think that's where it is, the need to help our customers build that journey, build that view, and say that, maybe this is the focus. Like, let's focus on underwriting. Let's focus on intake. This is maybe a low hanging fruit, but this could lead to so much profitability, so much of reduction of the manual task. Maybe this is a risk appetite score that you're getting of your book, and you can easily know what to decline, what to accept, and things like that. So that's the tools that we need to come back with. And coming back to that interesting question about our partnerships, uh, we've been partners for a while now, and HCL really works with the ecosystem of IPs and partners to help their customers, because when we look, as I'm mentioning, that we look at end-to-end transformation, be it on the underwriting side, be in the claim side. So that's where Newgen helps us provide their low code, no code, but analytical tools that are simple enough to kind of deploy, but help the customers in magnitude of ways. It's just not one solution all. And we're saying that, okay, just focus on that and not the other thing. As we've always been saying, it's an end to end. It helps right from the unstructured to the whole orchestration, and there are many more such offerings as well. But I think that's where it helps, that when we look at our problems, across the folks that we're talking to, we say, okay, this is where things could fit well. And I think that's the expertise we bring of knowing the industry, having that domain expertise, working with different customers and different sites, and working with product firms like Newgen to bring a holistic solution for our customers.
Excellent. Thanks, Deeksha and Anurag, for those questions. And in lieu of time, we're going to hold off on responding to questions from the audience, and we'll respond to them as needed. But man, what a great discussion, guys! Thank you very much for spending time with us today, giving us a deep insight in regards to how you see the carrier marketplace and what you're doing with your customers. So as we've seen today, the industry is changing fast, right? And it's essential to adapt and innovate by embracing innovative technologies and proactive strategies. We can not only overcome challenges, but also seize new opportunities with technologies that we discussed today. So thank you, everyone, for joining us and for the great questions. We hope you found this session as enlightening as we did. If you have any further questions or want to contact our speakers, do not hesitate to do so. Again, have a wonderful day, and we look forward to seeing you at our next event. Thank you, everyone.
Thanks,
Thank you.
everyone. Thank you. Bye.
Thank you.